Start.
Hello everyone, good evening. I am CA Chaitanya, Joint Secretary State Finance Committee, Karnataka Water Please Air. We are pleased to invite all of you to Water Please Air CA Meet. This is an interactive platform or forum for CAs to exchange their ideas or knowledge. This is the second session on Section 68 and 69 of Income Tax Act. We are inviting our honorable speaker, Mr. CA Naveen Karima. Over to you, Naveen.
Let it be interactive session, members. Wherever there is doubt, please stop and please have a discussion. Now, in this series, we had discussed last week some issues in 68. There are still various issues left out in 68. So, we would be covering that also at a later date. Every week we will be doing 68, 69, several issues. Now, 69 also I want to start and take few issues here. Next week again we can take a few more issues in 68 and 69. Now my dear friends, I will just start this presentation. Now what is 69? Very important. 68 was cash credit. What is 69? 69, have no confusion. It is the investments which are not recorded in the books of account if any. Section is telling which are not recorded in books of account if any. So where in the financial year we go to the section and then we try to dissect and bisect the section. Where in the financial year immediately preceding the assessment year, the assessee has made investments which are not recorded in the books of accounts if any, maintained by him for any source of income, and the assessee offers no explanation about the nature and source of investments, or the explanation offered by him is not in the opinion of the AO satisfactory, then the value of investments may be deemed to be the income of the assessee of such financial year. So my dear friends, partly disclosed investments will not come here. That would come in 69B that we cover further. In 69, it is clear it's only unexplained investments. Rather the investments which are not recorded in the books of account, if any. Unlike cash credit where books were a must, in these unexplained investments, there may be or there may not be books of accounts. And then, if they are not recorded, if you give the source, nature and source explanation, it will still be accepted. Now, we will try to see the salient features. See, before this, I just want to bring to your notice is nowadays lot of unexplained investments are there outside of India. Suppose you have invested in a property outside of India. You have a bank account outside of India. You have a bank account in California. You are not declared. You have some shares in Connecticut in USA, not declared. You have some deposit, you are a depository participant or some shares of a company you have purchased and then US not declared. You are a trustee in a trust which is created in the US. So be careful. Henceforth, what has happened is if you have any undisclosed asset outside of India which is in the form of an undisclosed investment, it would not be taxed in the Income Tax Act. In the course of search, it is found Kamlesh has got 5 shares in Sri Lanka and Kamlesh has got a bank account in California. Then what the law is telling, I am not going to tax these investments which are made abroad in a foreign country, situated outside the shores of India under 69 Income Tax Act in India. Rather, I will tax it as black money and it will be taxed under black money undisclosed income and assets imposition of Act 2015. The Black Money Act. You will be surprised and shocked to know I am not going to details of Black Money Act. Rather, I am telling you that one or two points I want to tell. Black Money Act has no limitation. If Kamlesh made the investment 25 years back, it will still be taxed. Black Money Act, you are not, there is no jurisdiction. No question of any jurisdiction. No question of the jurisdiction clause which you cannot argue on jurisdiction. You cannot tell that limitation period is not there in Black Money Act, very dangerous act. I will not go into other features of Black Money Act. So this is the problem. So be careful. Any undisclosed asset outside of India, point number 1, is not undisclosed investment for the purpose of 69. It is undisclosed investment, is it undisclosed asset, but it will be taxed under the Black Money Act. So be careful. Now, when escape. So in the year of detection, it would be taxed. And there is anyway penalty and prosecution under the Black Money Act. Now again, my dear friends, something called as Prohibition of Benami Transaction Act. Before even going to Income Tax Act, department will catch you here itself. You will be caught with your pants down, I am telling you. Black Money Act. Undisclosed asset abroad will go under Black Money Act. Suppose Benami Prohibition Act is invoked in the course of a search. In the name of Benamidar, Kamlesh has invested FD of 1 crore in the name of Gautam. So this fellow is the Benamidar, and the investment of the associate, that is Kamlesh, in the name of Benamidar. Who is the Benamidar of Kamlesh? Mr. Gautam. So that I will tell you, because he is in India, it would be taxed under 69 as well as under the PBPT Act, that is Prohibition of Benami Transaction Act 1980. So there would be, what will happen in Benami Act? Your asset will be confiscated without any payment under Benami Act. I will not go in detail, but listen carefully. Asset would be confiscated. 1 crore FD is made by Kamlesh in the name of Benamidar Gautam in India. Therefore, what would apply? 69 would apply in Income Tax Act. Benami Provision Act would also apply under in the hands of Kamlesh, and the FD, that undisclosed investment, would be seized without making any payment. And you know what is the penalty under Benami Act? 125%, sir. That means 100 rupees is seized, 100 rupees will anyway go, pay 25% extra. So 125% is the penalty under the Benami Act. Now, other features of section 69. So we were discussing about your Benamidar and Benami assets. So what are we telling is, unexplained investment in the associate's name where is the Benamidar will not be taxed under 69. It is proved that our Gautam is Benamidar of Kamlesh. He is telling, I will not bring to you to tax under the Income Tax Act, because associate's income as investments have not been made by associate but by the beneficial owner. Who has made investment? Gautam has made investment. Investment will be liable for confiscation, we discussed. And both the Benamidar associate and the beneficial owner is Kamlesh and Benamidar is Gautam, will be liable for prosecution Benami Act. So therefore, it is quite possible, I cannot tell that, it's a double taxation. Investment may be taxed on 69 lands of beneficial owner also. So investments covered under 69, I told you unexplained investments. Kamlesh has invested, the father has invested in his name, his wife has invested in his name, mother has invested in his name. What to do? Investments covered under 69 are those made by the associate, not by any other person such as father or mother. Understand the difference, very minute. Kamlesh has made investments from his source in his name, in his father's name, in his mother's name. Not declared, not recorded in books. That investment tax lands of Kamlesh, but father of Kamlesh, mother of Kamlesh, wife of Kamlesh, girlfriend of Kamlesh, made investment name of Kamlesh. It will not be taxed in Kamlesh and it will tax in those persons' acts. Have you understood, sir? The difference. The only investments covered under 69 are those made by the associate, not by any other person such as father, mother, etc. Have you understood? If the investment made by the associate, it will be covered under 69, even if it stands in some other person's name. What I told, Kamlesh made investment is girlfriend's name, mother's name, wife's name, father's name, etc. Now, go forward. Basis of invoking 69 is associate has made investments, not the ownership. I am not bothered about the owner. Basis of invoking 16 is what? Associate should have made investments. I am not bothered who is the owner. Who made investment? Because Kamlesh made investment in Gautam's name, Kamlesh made investment in Neeraj's name, Kamlesh made investment in my name. Who made investment? Kamlesh made investment. I am the owner. This fellow is the? Yes. Next, unlike section 68, section 69 applies regardless whether the associate maintained books of account or not. Because the word user is any. So don't tell me books are not maintained. Don't tax my initial investment. Not possible, sir. Associate is bound to justify source of investments made by him either by showing that entry in the books, if any, maintained by him. If no entry is there in the books, then he's telling, don't worry, you offer satisfactory explanation to AO as to the nature and source of the investments. Obligation to offer satisfactory explanation is on whom? Onus is on the associate, is on Kamlesh, not on his legal heirs or any other person. Obligation to offer satisfactory explanation is on the associate, not on the legal heirs or any other person. Very interesting issues as we go further we'll discuss. What about jewelry declared in wealth tax return? There is a search. Jewelry declared in wealth tax return before date of search, after date of search. Sir, before date of search, after date of search. So, there are case laws, don't worry. It is telling you have declared jewelry before your date of search. It is not appearing in balance sheet. Jewelry has been declared in wealth tax return. They will accept, don't worry. After date of search, rather after this wealth tax return is abolished, Arun Jaitley came and told wealth tax return is only what 1% of tax. I think wealth tax was abolished way back in 2015. So 2015 itself, according to me, wealth tax was abolished by Arun Jaitley. Why? More than 30 lakhs, 1%. What do you department get? More than 30 lakhs, 1% of net wealth. And one house, one house was free in wealth tax. All commercial properties free in wealth tax. All let-out properties free in wealth tax. 500 grams, I think, what was it? 500 square meters of this jewelry, 500 square meters of site was free, etc. So many things were free. So the problem therefore is, and only 1%, and he told that, it is having a lot of cost to make that. So our Jaitley ji, late Arun Jaitley, abolished wealth tax. Now the problem is, post 2015, if I have declared before 2015 in wealth tax, not an issue. Today search is there. Suppose they found 3 kgs gold, 1 kg declared in search, etc. 2 kgs not declared, fine, 1 kg allowed. Now, post wealth tax abolition, where do we declare gold? I have got my gold. But I have not declared wealth tax because there is no wealth tax return. Therefore, law is saying what to do? Schedule more than 50 lakhs income. You have to fill up that personal assets details are there. Schedule AL. The law is telling how to declare. You have to declare in the return. Where is the return? Which column to declare? Schedule AL, personal assets. What is it called? More than 50 lakhs. Schedule AL, assets, liabilities, personal assets. Even though not more than 50 lakhs, I am telling you, please declare them. Otherwise, how will you declare jewelry, gold, etc.? You have to declare them. If you declare and then upload the return, automatically it forms part of the balance sheet. That's schedule AL. Because now there is no wealth tax. Therefore, it's very difficult for me to prove to the department. But what is the per gram gold, sir? You take last 10 years, how it has increased. So, if you are not able to explain satisfactorily as to the nature and source of the gold, it would be taxed as unexplained investment 1669 and as discussed 115 GB and penalty and 270 AC would be invoked at 60%, 10% respectively. More circular, sir. Instruction number 1916 dated 11th of May 1994. All of you are with us today. We'll have a discussion for the 11th of May 94. Board instruction number 1916, which says in case of a wealth tax associate or in case of a structure. So, gold jewelry and ornaments found in excess of the gross weight declared in wealth tax only need to be seized, not the entire gold jewelry. So, this is what we were explaining. By Finance Act 215, as repealed Wealth Tax Act, so it is not possible for me to file wealth tax returns. 2015, lot of people filed wealth tax returns. Lot of people they filed wealth tax returns. So now what to do? As I told you, please declare that in Schedule A of idea forms. I need something to declare now. How to declare to the department? I cannot now. There is no question of any financial statements, etc. Don't put in financial statements. Just in balance sheet, gold jewelry, 500 grams dash. How to declare? Is the financial statement is it getting uploaded? No. Therefore, you have to should and must declare under Schedule A. That too, whatever you declare, please see to it there is source, nature and source of explanation. Therefore, if you don't declare, then you will have to explain the nature and source. So, as per that instruction number 1916, dated 11th by 94, in case of a person who is not assessed to wealth tax, so gold jewelry to the extent of 500 grams per married lady, 250 grams per unmarried lady, 100 grams per male member of the family need not be seized. I repeat again, gold circular is there 1916, don't panic. 11th by 94, in case of a person not assessed to wealth tax. Suppose assessed to wealth tax, whatever gold jewelry, ornaments, diamonds, silver is also exempt in wealth tax those days. Silver utensils, but silver jewelry. There are two separate things. One is exempt, one was transferred in those days. And even in capital asset, anyway, I am not going to those aspects. Basically, what are they telling? You guys have filed wealth tax. You guys have not filed wealth tax. So when there is a search, you have filed wealth tax, they will accept nothing good. Those who have not filed wealth tax, they are telling, I will also accept some portion. How much? 500 grams per married lady, 250 grams for unmarried lady, 100 grams for male member. So to this extent, the gold jewelry and ornaments are not unexplained investment. Be careful. Please be well versed that there is a board circular for this. You can explain. Explanation of nature and source published by association should be a factual explanation and not a mere legal argument. Some case laws are taken, they will explain how to explain nature and source. These laws have explained departments accepted. I have put some case laws there. If the associate is able to partly explain the source and nature of investments by way of entering in books or price, 69 we would apply and not 69 as I explained to you earlier. Now, issue number 1, section 69 is constitutionally valid, nothing to worry. Now, when is section 69 attracted? Only when associate fails to explain the source for the entire amount of investments. Okay. Now, issue number 2. Post office time deposits not shown in the balance sheet and source not satisfactorily explained are liable to be treated as undisclosed income under section 69. So there was a search in this case. During the search of this firm, premises under 132, it was found that the associate had made investments by way of time deposits in post offices during the year of search. And these investments were not shown by the firm in its balance sheet. Therefore, such investments are rightly treated as undisclosed income. Fine, sir? Very simple issue. Now, what about undisclosed investments or undisclosed stock in trade? Would that also be undisclosed investments for 69? Whether undisclosed investments or undisclosed stock in trade will be investments for 69. Section 69 nowhere provides that it would be no only if undisclosed investments are made in a capital asset. Even investments in stock in trade, which is recorded in the books, or undisclosed will be investments for 69 purposes. Right, sir? So even investments in stock in trade, which is unrecorded in the books or undisclosed, will become investments for section 69 purposes. Now there are main points to kept in view while interpreting the word investments occurring in section 69. The word investment should be read in accordance with the words preceding the associate has made. How to read? Investment should be read with the words preceding it. The investment associate has made. Therefore, the investment should be investments made by the associate only and not by anyone else, including his deceased parent, etc. Because what the word is telling is preceding it is the associate has made. That means associate has made investment. Secondly, the word investment is also qualified by the words in the financial year immediately preceding the year. Thus, the investments made during the relevant previous year alone are in the scope of this section. So, investments made may be in India or out of India. We discussed that. 69 nowhere said that it will apply only to investments made in India. However, because of the black money, undisclosed foreign income and assets, and imposition of tax in 15, undisclosed foreign assets will be taxed under the Act. And outside the pale of Income Tax Act, it will not be investments for 69 purposes. Once again, I just make a note. Move forward. Issue 3 we discussed. Move forward, sir. Now, this is after issue 3. Yeah. Move forward. Investment made by assessing the name of Benami lands to be covered by 16 as well as Prohibition of Benami Property Act. Correct? Assessing owns any investment as Benami for another person that is Benami beneficial owner. It will not attract 69 as far as assessing is concerned. However, Benami assessing shall be liable for prosecution under section 53 of the BT Act. That is the Prohibition of Benami Property Transaction Act. Emphasis I tell you again and again in 69 is on investments made and not on the ownership, as is the case with 69A or 69B. Now, investments disclosed in income tax return in schedule AL, whether exempt from 69. That's what I told you how to declare. So, income tax return, require disclosure of assets and liabilities as at the end of the year, where the total income of the assessee for relevant year exceeds 50 lakh rupees. So details of assets and liabilities are required to be disclosed in Schedule A. Question arises is, what if the investments made by the assessee during the previous year in question have been disclosed in Schedule A of the ITR form? Would it take the disclosed investments outside the pale of section 69? Answer is no. All that matters for 69 is whether the assessee has fully and satisfactorily accounted for source of investment made during the year, is accounted for to the satisfaction of the AO by way of entering the books, if any maintained for any source of income or otherwise accounted to his satisfaction, as acquired out of taxable income shown in ITRs, or out of taxable incomes or out of non-taxable capital receipts such as loans. Disclosing Schedule A or Schedule FA of ITR is relevant only for purpose of imposition of penalty. And non-disclosure does not automatically trigger penalty, dehalts the non-taxability of amount in acts of assessee and dehalts the bona fide conduct of the assessee. So it has been held in this Madhav Prasad Agarwal Rajasthan High Court. If the jewelry in question has been shown in well tax return before date of search, it could not be treated as unexplained investment in gold jewelry. Then the Wealth Tax Act 1957 has been repealed by Finance Act 19, hence replaced by the requirement to disclose assets and liabilities in Schedule A of ITR forms. Now, next issue number 9. When ornaments is not considered unexplained gold circular, we discussed that. 500 grams for a married female, 250 grams for an unmarried female, 100 grams for any other male member. Now, so there are various case laws here. Unless revenue shows anything to the contrary, it should be presumed that source of the extent stated in the exception number stands explained. Now, English, there is one more case law here. Search in assessee's premises. Gold found is 770 grams. Purchase of out of which 770 grams, purchase of ornaments of around 115 grams could not be satisfactorily explained. While remaining 655 grams could explain on account of the fact that the wife of the assessee was having ornaments of her own, which were given as marriage gifts by her parents, and also that the assessee and his children had received them on various occasions by way of gifts, like in your children's birthday, engagement, bit of ceremony, etc. And in view of the fact that gold ornaments of 342 grams belonging to wife was much below limit of 500 grams indicated in CPD's instruction dated 11th May 1994, additions in respect of this could not be sustained in assessee's. Similarly, in view of the board circular, it should be alerted. Addition in respect of ornament of 313 grams balance attributed to the assessee and his children would also be unwarranted, as the benefit of doubt was to be given to the assessee up to 300 grams, the rate of 100 per gram per male member. Because there is assessee and 2 children. So out of 313, he is telling, as he told, each male is 100 grams. So allow 300 grams. 313 explanation is not there. Immediately you should be alerted. You or your assessee should be alert. No, sir. Based on the board circular, 300 grams please allow. 100 grams per each male member. Certain jewelry and documents concerning their purchase were found from assessee's possession during search, merely on the ground that the premises was occupied jointly by assessee's sons, their spouses and children. Assessee could not claim that jewelry belonged to ladies. Now move on further. Collection of jewelry of 906 grams by a woman in married life of 25 years in form of streethen or on other occasions is not abnormal. Court is saying, Delhi Parliament is saying, no, 25 years married life. She has accumulated how much gold? 900 grams. This is not at all unreasonable. So this is not at all abnormal. So therefore, the tribunal selling assessing officer was unjustified in treating only 400 grams as reasonable and treating balance remaining jewelry as unreasonable. Therefore, addition was deleted. So what the courts are also taking very benevolent stance. They are telling the woman is having 25 years of married life. She has got streethen, other occasions, betrothal ceremony, engagement ceremony, children's namkarana, birth of children, etc. 906 grams we accept. Based on the custom and tradition of the family, they are accepting that. So it is deleted. Similarly, in this case, what are they telling? you know the demonetization, what has happened? 21 to 17, housewives having made deposit during demonetization less than, and is having no business income. But our bank deposit is rupees 2.5 lakhs. So, what is saying, yes, we allow it. We are not going to question. Burden of proof to explain only on the SSA, I told you, not on its legal acts. So, section 106 of the Evidence Act of 1872 reads as under burden of proving fact, especially within knowledge, but any fact, especially within the knowledge of any person, burden of proving that fact is upon him. Section 69 of the Act, the Income Tax Act, is engraft the principle of 106 of the Evidence Act. Since how and from where assessee funded, how did Kamlesh make an investment in 1 lakh? Or Kamlesh made the investment in 2 lakhs? Only Kamlesh knows. As per Evidence Act, what is it telling? That burden of proving the fact is within the knowledge of the person who made that investment. So burden of proving is also on Kamlesh. He made the investment, it is in his mind, court is telling. So, since how and from where assessee funded that investment, how did Kamlesh make that investment? Is especially within his knowledge, nobody else's knowledge. Therefore, 69 casts the burden of proof on Kamlesh, on the assessee, to explain nature and source of investment. And this burden of proof cannot be shifted to the legal heirs. Selvakumar ITO, this is Cochin's case, was held that assessee used in 69A contemplates only original assessee, not the legal heirs. Again, in another case law, Pune tribunal decided that the deceased only would explain the discharge is burden the referring certain material or evidence. Therefore, it cannot be held that after his death, the burden shifted to legal heir of the deceased. All the circumstances owed to and within are exclusive knowledge of the deceased, and the legal heirs could not be forced to explain such which are not known to them. Okay, you cannot force the legal heirs. I don't know, he is telling. Who made the investment? The investment was made by the deceased. Legal heirs saying, I don't know. What was the source? I cannot be asked to explain the source in the hands of the deceased. No doubt I am his legal heir. But I do not know. Why? Evidence Act is telling. Who made the investment? It was the deceased. He is no more. How can I discharge this burden? By referring to certain material. That's all my investment. What is source? How I do it? I don't know. It is the exclusive knowledge of the deceased only. Now, issue number 7. What do you mean by books of accounts, if any? What do you mean by books of accounts, if any? Section 69 uses the word books of accounts, if any, maintained by him. From this word, if any is clear that the maintenance of books of account is not a condition precedent for invoking section 69. The words, if any, used by the legislature themselves show that the maintenance of books is not a condition precedent for application of section 69. Now, move forward. Whether books of account maintenance necessary for 69, Madhya Pradesh High Court held that where assessee has not maintained books and additions are made towards significant investments, the additions would be sustainable under 69 only and not on 69B. Because 69 provides that where any financial year immediately preceding the assessment year, assessee has made investments which are not recorded in the books of account, if any maintained by him, for any source of income, and if anyone does not find satisfactory explanation from the assessee, then the value of investments may be deemed to be the income of the assessee of such financial year. Move forward, sir. Is 69 applicable to cash deposit in bank? Assessee is not maintaining any books of account. Though 68 will not be applicable, yet cash deposit in bank should be explained by assessee under 69 or 69B. Unless the assessee by any clinching evidence shows nature and source of money deposited into his bank account, same should not be added as assessee's unexplained income. Now, for making addition to 69, no need for anyone to express a record rejection of assessee's books in the order. So what are they saying? Well, the accounts are not reflected in the account books. It can be explained the assessee under 69 is entitled to an opportunity to explain. If in the opinion of the AO, the explanation is not satisfactory, income can be added. So, what is the court telling? Calcutta, apparent from 69 and 69B that for making an addition, it is not necessary that the books of account have to be rejected expressly, or that it is to be in express terms recorded that the books of accounts are not reliable or explanation not satisfactory. Assessing officer before making his addition 69 will not do these things. He is not going to reject the books, or he is not going to claim that books of accounts are not reliable, or our explanation is not satisfactory, but it has to be gathered from the order itself. Whether in effect the AO was satisfied with the explanation or had found that the books of accounts were not reliable. It is not the technical terms which must appear in the order. It is the substance of the order that the AO was not satisfied with the explanation, which is the duty of assessee to offer explanation. Now, Supreme Court has held that in the case of PK Nurjahan, even if assessee's explanation regarding source of an investment is not found to be satisfactory, AO has the discretion to treat or not to treat such investment as assessee's income. Okay? Similarly, Andhra Pradesh High Court held in Mughal Darbar's case, even if the explanation of assessee is rejected, Section 69 confers only a discretion to the AO to deal with the investments as income of the assessee because the word used is may and not shall in the said section. May treat the value of investments as income in case explanation offered by assessee is not found satisfactory. Kerala High Court in Anand Rajan's case held that if the books of account reveal sales and in regard thereto there is no material of a corresponding nature that the assessee could purchase the commodity for the purpose of offering for sale, situation becomes an invitation for the assessee to explain as to how and from what source he held the amount of commodity in regard to its purchase before it was offered for sale. However, in the absence of an explanation, the deeming provision of 69 would apply. Again, Kerala High Court in M.A. Unnirputi's case, what is it telling? Funds comprising intangible additions made in earlier years would not help an assessee to presume that the said fund was always available to cover the unexplained income of the succeeding years. This was the assessee to establish that he has not earned any secret profits during the year and that the investment flowed from intangible addition made in the preceding years. Now, just to give you some examples, instances in which explanation as to the source of investments were held to be satisfactory. Now, this is in the Mumbai tribunal, whereas a part of memorandum of understanding between group companies, certain shares of group company was transferred to associate cost, and all these investments were recorded in the books. And it was not the case of revenue that the assessee had paid any amount in excess of what was recorded in the books, and apparent consideration was not real consideration. No addition could be was sustainable under section 69. Now there was a search here, and the assessee explained that there are certain fixed deposits which are in the name of his minor son, which is made out of different ceremonial gifts received on various occasions. And neither during the search nor by the assessing officer any such material was brought disproving the assessee's death. And the assessing officer had neither conducted any inquiry nor examined the dories. So I am telling the source for this gift is out of the ceremonial gifts. The approach adopted by AO in accepting only a part of total deposit as ceremonial gift while adding the rest of the amount as administrative deposit must be held to be arbitrary and cannot be sustained. Very important decision in favor of the assessment. Move forward, sir. Credit entry in the bank account of an assessee on account of remittance from a foreign bank as a result of disbursement from family trust. So investments is being reasonably explained. Application of 16 was out of question on the tribunal in 2018. Again, interesting decision, Anchal Properties Industries, again, Delhi Tribunal 2018. On the basis of certain figure appearing in a diary seized from sister concern, an addition was made to the income of the assessee on account of cash payment for purchasing land from a company. Since no other evidence was recorded during the search, nor any concerned person against whose name entering the diary appeared was examined, that addition was believed. Next, addition was made to assessee on the basis of certain slips found during search on the ground that cash reflected in such slip was not reflected in books of an assessee, since there was no material to substantiate assumption that the slips denoted amounts outside the cash of assessee included additions were unjustified. Again, in case of Anchal Properties, Delhi Tribunal and Mumbai Tribunal. Addition was made to income of the assessee on account of amount deposited in foreign bank account to a trust owned by NRA. Since it was found that the said amount in bank account was actually owned by said NRA, and here also admitted, same income addition was unjustified. Next, the Supreme Court judgment, Commissioner of Income Tax, Dr. Sadiq Sheikh, 2018. So, High Court in this case applied tribunal's order deleting addition in respect of undisclosed sales of flats on the ground that The sale was in fact carried out by the developer, and sale proceeds never came into the possession of the assessee. Therefore, a simplified inside decision was to be dismissed. Another interesting decision of the Allahabad High Court. What has happened in the search took place? Statements recorded all of remand 132.4 from the assessee. In the statement recorded 132.4, assessee surrendered 18 crores as undisclosed income on account of investment made in purchase of jewelry, precious stones, 18 crores, and 6 crores as cash in hand duly shown in the books. 7 crores were surrendered in stipulation that details of the same would be given in due course of time. However, no incriminating materials or documents have been brought on record for a set amount of 7 crores. Since no assets of 7 crores were found by the authorities, nor such assets were identified or declared by assessee, it could be inferred that no such assets actually existed, and the tribunal was right in holding that additional respect of 7 crores was not based on any evidence. Excess jewelry found during such proceedings belong to partners of the assessee jewelry firm. No addition could be made in the hands of the firm, treating the firm as undisclosed, treating the firm as undisclosed income. Now, department also liable to prove the existence of unexpected investment. In Dayachan Jain Media's case, Allahabad High Court has added to that merely because the assessee's explanation regarding certain investments made by wife and sons are not acceptable, the revenue cannot treat the investments as undisclosed income of the assessee. The revenue should bring on record material from which it could be concluded that the investments were in fact made by the assessee. If this was not done, no amount could be added as undisclosed income of the assessee. Now, additions are unjustified based on uncorroborated and retracted statement. Now, assessing officer made an addition 69A primarily on the basis of a statement of a person and raised tax demand. Since that said person did not appear for cross-examination, and further for the previous year he had retracted such statement, reliance placed on such uncorroborated statement of the said person for making the impute addition was highly questionable. Therefore, entire tax demand was to be kept in abeyance till disposal of appeal of the merits by the CIT appeals. Now, Kader Khan and Sons famous judgment of Supreme Court, Madras High Court, Kader Khan and Sons, Madras High Court, which went to Supreme Court. What is it? Whether assessee admitted undisclosed profit during survey and retracted the same at the time of assessment. So, undisclosed profit is admitted during survey and was retracted at the time of the assessment on the ground that admission was due to only mental pressure and coercion. It is a settled law that whatever statements recorded under section 133A under survey is not given under any evidentiary value. Obviously, for the reason that the officer is not authorized to administer oath and to take any sworn statement which alone has evidentiary value as contemplated under law. Because this statement is not under any oath. Therefore, in this CBDT, there is a board circular. Please go this board circular very carefully. Whenever there is such, read this circular. 10th March 2003, F number 286, bar 2, bar 2003, IT investigation. Board has clarified, I am not clarified, board is telling. What is the board telling this circular? Incidents have come to the notice of board that where assessees have claimed that they have been forced to confess that undisclosed income. You are forced to confess in the course of survey or search, during course of search and seizure and survey. Such confessions, if not based upon credible evidence, are later retracted by concerned assessees while filing returns of income. In the circumstances, such confession during the course of search and seizure and survey operation do not serve any useful purpose. It is therefore advised that there should be focus and concentration on collection of evidence of income, which leads to information on what has not been disclosed or is not likely to be disclosed before the department. Similarly, when recording the statement during the course of search and seizure and survey operations, no attempts to be made to obtain confession as to undisclosed income. Any such action, on the contrary, shall be viewed adversely. Further, in respect of the pending assessment proceedings also, the assessing officer should rely upon evidences or material gathered during the search of survey operations or thereafter while framing the relevant assessment orders. The court is telling statement of the assessee cannot be made a sole basis for action without any material evidence. Very good. You cannot just make an addition based on this admission. Have you got any material evidence? And therefore, there is no provision in the statute to prevent the declarant from retracting his statement. AO cannot make an addition without bringing any adequate material on record to prove the real income to be as admitted by the assessee in the course of survey. and the AO must examine the correctness of statement before we do the addition. Now, forward. Assessing not justified in respect of capital introduced by SSC from funds received from his relatives to banking channel. SSC has introduced capital from funds received from his relatives towards advance of purchase of property to banking channel. Same was recorded in books upon identity of the person from whom amount was received also not in doubt. Provision of 16 could not be invoked. So where SSC informed the address of the person from whom amount was received and also requested the AO to summon that person if there was any doubt. Addition under 69A was not justified if summons was not issued by the assessing officer 2/20/21 Jagmohan Kaur, Ajwa, Chandigarh, right? Not justified 69A, not justified in respect of money offered to assessing the PMGKY scheme 2016. Next one. Cash deposit during demonetization cannot be regarded as unexplained without calling for explanation from assessee. This is Salem Sri, Ram Vilas Chit Company. Madras High Court delivered by the good friend Justice Vinit Kothari during those days. Without calling for an explanation in writing from the assessee, assessing officer should not have concluded that the assessee had not properly explained deposit of cash collected during demonetization into their account and treated the same as unaccounted in the hands of the assessee. The one more interesting decision of Delhi Tribunal. Source of initial capital for new business was explained by assessee as he was working with the company on salary basis. Addition not justified in the inquiry from exemplar. So this associate started a new business and the source for initial capital is from the company where he was working and is based on the salary. So the departments, the boards are telling you can't make the addition without making any inquiry with the exemplar. Please question him. Send 133 or send 131 summons, call him. Confirm that whether this would have paid salary. If this would have paid salary to the associate, that means associate received salary. That salary is introduced by way of initial capital in the new business. Cash deposits explained as cash received over and above consideration as per registered share deed. Addition not justified without inquiry into valuation. So AO rejected assessee's explanation that the amount deposited in bank account represented difference between amount shown in the registered share deed of property and amount actually received in cash and added the same to assessee's taxable income 69A. In view of the fact that no evidence or record was taken into consideration for valuation of specific piece of land at a relevant point of time, including order was to be set aside in matter was to be remanded back for disposal afresh. Now, addition of stamp duty paid as unexplained investment not justified when property jointly owned with wife and wife has paid stamp duty. So, in this case, again, New Delhi Tribunal 2021 Ashish Bharadwaj case, AO has made an addition on account of the stamp duty incurred by the assessee for purchase of the property as unexplained investment. Why? Since this property was owned by the assessee jointly with wife, and such amount of stamp duty was actually paid by wife of the assessee. And this fact was also brought before the AO, including addition made on account of said stamp duty, amount in the hands of assessee was unjustified. Where the assessee was outside India for a period of more than 182 days, he had become a non-resident and therefore salary income received by assessee outside of India from a foreign employer for services rendered outside India could not be brought to tax in India. Now, this is your Jaipur Tribunal case 2020 Ram Prasad Meena. Addition made towards unexplained investment in land not justified where income from sale of crop after taking household expenses was sufficient to cover the investment. So assessing officer noted that the assessee could not prove immediate source of investment purchase of land. He treated the said investment as unexplained since the income saved of assessee for last 4 years. That is income from sale of crop and income from sale of vegetables after deducting agricultural expenses and household expenses was quite sufficient and fully explained. Source of investment in land, and therefore addition 16 was to be deleted. Legal fiction under 50C can't be a source of funds to explain an investment. So 50C I will pass for a minute. What is 50C? Now Kamlesh has sold a property at Shimoga. So Kamlesh has sold a property in Shimoga in 2024 for a consideration of 1 crore. So Kamlesh sold the property for a consideration of 1 crore. The maintained value of the property was 1.5 crores. So Kamlesh sold a property in Shimoga for 1 crore to Mr. Gautam. Maintained value was 1.5 crores for acquisitions. Now, when the department, what they will do, who is the seller, sir? In seller's hand, 50C can be more. And in Gautam's hands, what will be more? 56 2 within bracket 10 because it is a 15 is hand. Because this 1.5 crore worth property is sold, Gautam has got only at 1 crore. So there is no double taxation. Please be careful, there is no double taxation. Kamlesh will pay tax on 1.5 crores at 20%. 50C capital is the seller. Gautam will pay tax on 50 lakhs. Is the gift to him under 56 2 in bracket 10 now. The question therefore is, I will go further. Kamlesh entered into a sale agreement in 2021. Property sold in 24. At the time where Kamlesh entered into a sale agreement in 21, he gave an advance. He received, for the Gautam, had given him an advance. So Kamlesh received an advance sale agreement of 10 rupees in check. I am telling you, Kamlesh received in check in 2021 towards sale consideration advance sale agreement from Mr. Gautam, only 10 rupees in check. Why is that? Mr. Kamlesh, show me that agreement. You are seeing the sale agreement, yes sir. Why is this provision introduced? They are telling this is only for anti-dating, backdating. What Mr. Kamlesh should have done is telling, sir, I registered the property in 2024. Stamp duty guideline value was 1 crore 50 lakhs in Shimoga. 3 years back when Edurappa was the CM, their example, the stamp duty value was only 1 crore. It sold to Gautam finally at 1 crore only. But in 2021, this fellow received 10 rupees. Any portion of the sale consideration, any part of the sale consideration is received in payment other than cash. In any mode other than cash. So Kamlesh received 10 rupees. Therefore, law is telling what is the stamp duty to be taken as on the date of sale agreement or as on the date of sale. It is only as a date of sale agreement. Because they are only worried about backdating or anti-dating. Because Kamlesh should have entered into sale agreement with Gautam. I have to give that. 10 rupees are given by check. This sale agreement need not be registered, don't worry. Have I given by cash? No. It is only through check 10 rupees and so that the agreement cannot be backdated now. Because already he has received 10 rupees 3 years back. The question I am again asking to the legislature is, what if the sale agreement is registered? Sale agreement is registered 3 years back. But Kamlesh received 10 rupees in cash. How can it be anti-dating or backdating? What is wrong? Why can't I receive in cash? Gautam has accepted, I am giving cash. Kamlesh said 10 rupees advance, token advance, both are friends. 11 rupees this fellow gave cash. 21 registered agreement. In first case, the sale agreement is not registered. Therefore, backdating, anti-dating, fine. You got to check to believe. I am taking step forward. The agreement is registered, amount is received in cash. Why can't we explain? Is this the way? So we are going to take the stamp duty as on 1.5 crores in 24 and make Kamlesh pay tax on 50 crores which didn't receive. There may be a genuine case. Or one more case is, he agreed to a sale agreement, it was entered in 21. But after 6 months, he paid amount. After 6 months, Gautam paid amount to Kamlesh. Sale agreement is entered in 21. He gave the amount in 22. So which date he wanted to take? But that sale agreement entered in 21 is registered. So these are all various issues, sir. So when we are thinking, these are all various issues which will come. And anyway, matter of subject matter discussion, not 50C, not 43 or 45 right there. We are not going to discuss that today. Now, this Narendra gave this case, photocopies of certified copies of documents are divisible in 90 proceedings. So assessee has obtained loans from a close relative. She invested in construction of a house property. She produced all the photocopies of the documents and bank receipts. So assessing officer does not accept assessee's explanation and evidence. And he says that the income is from undisclosed sources. Why? because they are doing photocopy. So, the court is telling held the rigid and technical rules of Evidence Act are not applicable to income tax proceedings. Therefore, photocopies or certified copies of documents are good enough for assessment proceedings. Since the assessee produced sufficient evidence to prove prima facie case in respect of said loans, which revenue failed to disapprove by making detailed inquiry investigation. Have you made, the court is asking revenue, hey revenue, did you make any inquiry or did you make any investigation about the genuineness of the loans? Then no, then you just cannot merely because it's a photocopy of evidence or certified copy of the document, you cannot reject that evidence. You make investigation, you make inquiry about the genuineness of the loans. Then you prove, you make a prima facie case, then you make the reason. Just because it's a photocopy or it is a certified copy, it is not a good enough reason to make addition in the code of assessment proceedings, and therefore the addition matters. Was evidence for ascertaining the value of investments. Okay. What is peak credit theory? So there is a peak credit theory is there, telescoping is there. A humble request to all members should be alert, sir. Whenever there is search and survey, understand meaning of two words. What is peak credit? What is telescope? Peak credit, telescope. We'll study both and we'll see some case classes. So these are all 69 involved only in search and survey. What is peak credit theory? Peak theory is there is a single credit or number of credits in a books of account of any person. Those with number of debits also should be arranged in serial order. All the credits as well as debits arranged in serially. So that a credit following a debit entry should be treated as referable to the latter to the extent possible. The peak of the credit should be treated as unexplained and not the aggregate of the credit amount. Peak of the credit to be treated as unexplained and not the aggregate of the credit amount. So it's telling see the peak of credit and debit, not of credit, debit, credit, debit. So this debit entry, credit following the debit entry, there is credit following a debit entry should be treated as referable to the latter to the extent possible. These are all the case laws. Various cases are observed wherein the AO has added entire credits of bank statement without considering debit entries in bank. So principle of peak credit comes into play only when there are several credit and debit entries there in bank. Several credits and debits. Therefore, you have to knock off both and then only take the peak of the credits. Don't simply blindly, assessing outside debts as only the credits in the bank account and forgets all the conveniently ignores all the debits, which is wrong. Funds operated from such account is taken to be one and the same and only the highest of peak of the amount in that account is taxed as an implied cash credit. Peak credit theory when to apply, sir? You can apply it only when there is rotation of funds, whereby the funds withdrawn on earlier days and deposited back subsequently, and there were no fresh deposits. Case law where upon I have given that 4 judgments. What is theory of telescoping? Now, theory of telescoping is a technique. What is a technique? It deals all subsequent transactions of the original transaction on amount which are merely rotation, recycling, conversion of one into other. By this technique, the real income is to be determined. By this technique, it is to determine real income. By in income tax, hypothetical income cannot be taxed. Only real income is subject to tax. For example, in a search, 10 lakhs are found, and the associate disclosed 10 lakhs in his return. Then it is telescoping that assets found were application of this disclosed income as other assets also were found in the search. Therefore, assuming or accepting the application of this income into assets is called telescoping. Both the above theories, peak theory and theory of telescoping are applicable in case of your block assessment. When there was block assessment, 158 BC those days. Move forward. NRCs and FDs seized from the assessee diverse wife, where diverse was by mutual consent. So here there is a search conducted in the assessee's premises as well as those of his diverse wife. So certain FDs and certain NSCs were seized from the wife's premises as well as from the locker with the bank account. So assessee, he contended before the income tax officer that he and his wife are living separately. since 1979, they are all legally diverse. And therefore, he's saying, I don't know, I cannot explain the source of assets found from my wife's premises. They found that FDR and NSA, etc. The husband is saying, I don't know, I'm living separately, I'm divorced since 79. Don't ask me, I don't know what the source of assets found from my wife's premises. The assessing officer, being a very smart person, is telling that no. You people are simply telling that your divorce is nothing but legal fiction. You have to camouflage the real nature of relationship between the associate and his wife. Divorce was nothing but a legal fiction. He have to camouflage the real nature of the relationship between the associate and wife. He therefore treated all assets and lifetime investments and made addition on substantive basis in assessing stats and protective basis in the wife stats. So the court especially tribunal held that the assessing officer could not appreciate. The court is coming heavily on the assessing officer, telling you are not able to appreciate the legal position of a divorce by mutual consent as provided in Hindu Marriage Act. Mere fact that the associate given his consent to such divorce proceedings could not be held against him, as the law enabled estranged the couples to obtain divorce by mutual consent, which is a device for containing the hardship of divorce in case of disputed proceedings. Even the court has noted the fact that the associate and his wife are living separately since 10/10/1979. Therefore, the whole case of the AO was based on suspicion, surmises, conjectures, and he had made additions with respect of assets found from the premises of the wife and from locker held by her, and additions could not be sustained in law. Whether additions qualify on grounds that cash book is not updated, search is conducted on 16/1/86. Naturally, when search is conducted and books are not updated, say it will be uploaded 10 days back. Suppose 16 search is there. Generally, books 15 days books are not updated. So, incumbent on the authorized assessing officer doing search or assessing officer doing assessment, that fellow should insist upon please update the cash book up to date of search 16/1/86. And assessing officer should have even paid for available cash as on 12/1/86 and probable expenses incurred by family and sales during the period 13 months or 16 months. 15 months. That's the addition for unexplained cash deserves to be deleted. So be careful. Books are not updated, no problem. Please tell him, sir, you have come for search on 16/1. My books are updated only up to 12. So therefore, give me credit for cash as on balance as on 12. And you have that responsibility, is your responsibility, that you should allow me to update the cash book up to the date of search 16. And you should give me the credit for available cash on 12/1 and probable expenses incurred by the family and sales during this period, 13/1 to 15/1. Therefore, court has rightly reduced the or deleted the addition for unexplained cash. What about stocks, unaccounted stock? Unaccounted stock found at premises of assessing firm of the viewers was explained as goods issued on approval basis, which was normal practice in assessing spread. Additions on such stock were unsustainable. Now, addition respect of imported camera not declared to customs. Dinesh and Jane. So there is imported camera not declared to customs. In respect of Canon camera, those days they used to get the Canon camera. So this Canon camera was seized from the assets. Assessee explained that it was gifted to his daughter by his brother-in-law. He brought it at the time of his transfer from residence to India. Since the list of items declared before customs authorities did not include Canon camera, EO was justified in rejecting assessee explanation and making addition as an investment based on reasonable estimates. Stock addition for excess stock, where such additions in sales tax assessment accepted by assessee. Today it is the GST and then it was the sales tax back. Excess stock is found on inspection by sales tax department, and addition in sales tax department also been accepted by assessee. Additions under 69 for such excess stock deserves to be confirmed. Now this is another interesting issue. Gold in the jewelers premises is belonging to customers. Gold found during search at assessee's jeweler premises found to belong to customers. In respect of such gold, assessee has maintained control account as required under Gold Control Act. And issued receipt. Addition on account of such gold was not justified. It was found, that time Gold Control Act was applicable several decades back. Found that the Gold Control Act was in operation at that time and assessee was subject to Gold Control Act and rules and was required to maintain stock register in form of GS11, which is needed to be authenticated and was also required to issue receipt vouchers in respect of each and every item of gold received. And such vouchers were also required to be authenticated by the central days. The associate had issued such receipt vouchers in respect of gold belonging to about 8 customers, and the same had duly entered in stock register. The above evidence did convincingly establish the associate's plea that these gold ornaments belong to the 8 customers. As such, considering all the facts and circumstances of the case, addition of the gold claim to belonging to above 8 customers in the hands of associate as a significant investment was not justified. What about unrecorded purchases? Unrecorded purchases to be debited and sales for these purchases were to be credited to P&L account, and after making separate addition under 69, additions on account of profit earned by making sales or of these purchases were also to be made. It is not the correct appreciation of accountancy principles to say that if the associate had made unrecorded purchases, then the same should be just included in the total purchases for arriving at a correct profit, and then only the separate addition should be made towards the investment in these goods, and thus the net effect would be nil. Where assessing made trade purchases and payment for trade purchases was made after affecting sale, no addition for the next investment would be made. Now, the word means, okay, value of investment in construction of immovable property, then stamp duty, FMV of house exceeds consideration shown in sale duty. So in the absence of any legally accepted evidence, valuation done for purpose of PC would not represent actual consideration passed on to the seller. Addition in respect of undisclosed gold ornaments under section 69. Addition under section 69 has to be made on the basis of what is the amount of investment the associate should have made in acquiring the undisclosed asset, and hence the value of ornaments has to be taken as the value which a purchaser would pay while purchasing the ornaments and not as gold. Because it is ornaments, it is not gold. Where the associate was carrying on business as a goldsmith, that is manufacturing of ornaments out of gold for customers, the transactions recorded in the documents recovered and seized from the premises of the associate would be presumed to be belonging to unless he has proved otherwise. Mere denial of the associate would not be enough. Now, a lot of household articles are found, sir, in the house when they come for search and seizure. You cannot go on asking the bill for each and every purchase, sir. They will come to your house, still things are their household articles. So the court is telling it is difficult for any person to maintain and preserve purchase invoices or bills in respect of all household articles, various household articles, which are being purchased from time to time, as is a common knowledge. Where the associate and his family members were all income tax assessees. They are declaring substantial income every year. Huge addition of 2.5 lakhs would not be made on the assumption that all those articles found in the house at the time of search were purchased by the associate in this financial year, or even during the previous year, relevant year under appeal. Addition in respect of old AC, TV, VCR, furniture, residence in absence of proof of cost of these items. Suresh Kumar Mittal's case, Chandigarh. SSC had made investment in the form of AC, VCR, TV, furniture, etc., which he declared to be worth around 78,000. Assessing officer valued such investment at 97,000. And he made corresponding additions. On appeal, what has happened? CAT appeal sustained addition of only 5,000. While addition sustained by CAT appeals was most fair and reasonable, keeping in view the fact that articles were old and no proof was submitted regarding cost of such articles. Now, move forward now. Last, we'll try to finish, time is up. We'll continue in the next day. So, the last issue on hand now. We'll take this remote property case. Sale agreement is showing higher consideration than sale. So, all of you know there is a sale agreement. Kamlesh, we'll take same example. Kamlesh, Shimoga, Gautam is the Kamlesh is the seller and Gautam is the purchaser. Sale agreement is showing higher sale consideration than sale date. So, as per sale date, last issue now, sale date is 1 crore, whereas agreement showed 1.5 crores. So, now what to do? In the course of such sale agreement is found. Sale date is also there. This fellow is declared 1 crore. Sale agreement says 1.5 crores. Now what to do? I will tell you. Associate entered into a sale agreement for purchase of land within incompleted structure for a total consideration of 2,07,000. Sale deed in respect of said land was subsequently executed for a consideration of 40,000 only. Assessing officer seized the sale agreement in the course of search. In the statement at the time of search, the assessee explained that the agreement was bogus one and made up for the purpose of obtaining loan for completing the cinema theatre. This was a case of a cinema theatre. However, the assessee explained that the parties from whom loan was to obtain were not finalized. Vendor of the property, one Mr. A, on examination by assessing officers, had stated that he had purchased the land for a consideration of 6,000 and he had spent up to 50,000 on the construction of theatre on the land. He further stated that he could not proceed further with the construction due to his wife's and his son's ill health and financial difficulty. Therefore, he sold the property to the assessee for rupees 40,000 and further stated that in the agreement the price was inflated for purpose of obtaining loan from the assessee. AO made an addition of 1,67,000 representing difference in value between sale agreement and value between sale deed. Since it disbelieved this explanation, held if the amount of sale consideration was an inflated one for the purpose of putting up construction as contained by the assessee and his vendor, the assessee would have proved the same by referring to the further action taken by in order to obtain loan on the basis of the agreement. For obtaining a loan for putting up construction, that is the theatre, no one would rely upon an agreement of sale rather than a sale, which only conferred title on the assessee. He is telling for obtaining loan, who will give the sale agreement? When they sell it, you give me sale deed, then only I give you the loan. For obtaining loan for putting up construction, no one would rely upon agreement of sale rather than the sale deed, which only conferred title on the assessee. The person without title cannot obtain loan on the basis of an agreement for purchase of the property. Further, the time within which the sale deed had been executed, which was hardly within 10 days from the date of execution of the agreement, belied the statement of the assessee and his vendor. The further feature that the assessee had paid 45,000 advance on the date of execution of sale agreement also strengthened the case of the revenue. If really the sale price was only 40,000, there was no question of paying over and above sale consideration in advance. Therefore, the receipt of 45,000 has not been denied by the vendor of the assessee, and the assessee had also not spoken about the excess payment of the advance. In respect of sale purchase of involved property, the parties, after negotiating terms of sale transaction, arrive at certain terms with regard to price and the time within which the sale has been executed, and thereupon extract the terms and conditions by means of agreement. Agreement would bind both the parties, and in case of breach of terms and conditions, it is always open to parties to agreement to take the recourse. If the parties arrive at certain valuation in terms of agreement, definitely they would have entered into another agreement by incorporating very different. But that was not the case in this instant case. Submission of the assessee that the agreement had not been acted upon also could not be accepted in as much as the sale deed had been executed only pursuant to the sale agreement. Therefore, it is the bounden duty of the assessee to prove that the sale consideration as stated in the agreement had not been paid. Except the statement, there was no material forthcoming from the assessee to the effect that the assessee paid only 40,000. In the absence of any such material, evidence produced by assessee, the contention of the revenue that the sale consideration was only as agreed to in the agreement could not be faltered with an addition of difference of 1,60,000 needs to be upheld. Fine, sir. So I think we have almost completed 1 hour 10 minutes. So we will try to continue the